This week, Ben and I are talking about the August WASDE report coming out from USDA and also looking at some personal experiences at just some production and looking at how green the fields are this time of year. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Doing well. How are you this morning, Will?
Pretty good. It looks like you're at a pretty interesting location with what looks like a mural of a rug painted on the wall behind you.
Yeah, it's actually a wall. It's a plastered wall. It looks like a rug. No, I'm at a field day this morning, and we tried to record from the field. That would have been really cool, but internet wasn't allowing us to do that. So thankfully for the trusty McDonald's just down the road, that's the recording studio for this morning.
I wonder how many times a year that phrase gets said. Thankfully for the trusty McDonald's.
It's reality in rural America, let me tell you.
There you go. Well, Ben, we have a little bit of a different program maybe today, but before we dive into that, I want to give a rundown on the changes on the week for the prices here. September 24 corn down 7 cents at 383. December 24 down 6 cents at 401. September soybeans down 60 cents at 971, a pretty large loss week over week there. November soybeans down 54 cents at 986. September soybean oil on a cents per pound basis up 39 cents at 40, up 0.39 cents at 41.48. Soybean meal on the short ton for September down $32.70 at $306. That 24 wheat crop for September down 3 cents at 536. 2025 July wheat down 5 cents at 596. Cotton for October up 1.74 cents at 68.29. December cotton up 1.29 cents at 69.07. Then that West Texas Intermediate crude oil contract went up $6.49 at 79.66. So Ben, a lot of gains, upward movement on that West Texas Intermediate contract, and then a lot of losses in different areas within the soybean complex, especially. What's your takeaway looking at the adjustments for this week?
Sure. So the West Texas Intermediate crude oil reacting to rising tensions in the Middle East. This is a story as old as time, I guess. Concerns about reduction in production for a major oil producing part of the world has led to a rally in this market. Last week, we saw a pretty strong deterioration. Strong is a relative word, but we saw a decent reduction in the price of energy market due to concerns about a global recession. We saw that broad sell-off in the stock market and just overall fears about the general economy. Those still exist and are kind of interwoven through the economy, but I don't think the fear is nearly as strong today as what it was last week about recession. And so therefore, some of that demand is being added back in, or, like maybe not as big of a demand destruction as what was anticipated a week ago. And then on top of that, the reduction in the addition of maybe some, or I don't know how to say this. So the smaller reduction in demand, maybe that's how I should say that. The smaller reduction in demand is more than offset with concerns about production, and that's what's leading to that higher energy prices across the board. So kind of a competing both areas there, creating a bullish picture for those energy markets. And then, as you mentioned, the soybean market has just been taking a brutal hit the last couple of weeks, really, continuing to work its way down. And we'll talk about the WASDE report, but the WASDE report was not friendly to soybeans on the bullish side of the picture. It was very bearish in nature, and it's going to be something that we're going to struggle with for a while.
Well, hinting at that WASDE report and how, things got shifted for soybeans. Global soybean supply increased by a decent margin. And looking at even domestically within the U.S., the soybean crop is on pace to be pretty large here in the U.S. So moving forward, I guess, what's the next step for soybeans? We keep talking about where might there be potential support, but it just hasn't seemed to come through anywhere yet.
Yeah, so the picture for soybean continues to remain bearish. It's hard to believe that we're still talking about bearish outlook when we're talking about $9 soybean prices. Futures markets certainly suggest that there's a lot of soybeans in the globe. Local cash prices suggest that there's a lot of soybeans entering into market still for the old crop. that's where we're at, right? We're going to have to see some type of major change. Our soybeans carryout, is at a point where we need to basically cut it in half to get back to stocks use levels that would justify any type of price rally. And it's hard to see cutting soybeans and the ending stock number in half. We're up over 550 million bushels of new crop carry out. We need to see that closer down to 300, or at least around 300 to even get somewhat excited about higher soybean prices. So it's a tough road. The soybean crop is not done, or not guaranteed yet. We needed moisture. Several parts of the Corn Belt are getting moisture this week, much needed moisture, and that's going to help. But there's a lot of soybeans out there, and the hope is that we can generate some more demand at these lower prices.
Well, it's the scenario when you're looking at the overall cost structure of things. The general economic principle is supply and demand tend to move prices one way or the other, depending on how those two factors are interacting with each other. And when we're seeing these continued losses, one way that hopefully, can still support the bottom line is just overall strong production. And Ben, this last weekend, I went home. I was at the Missouri State Fair for a couple of days. And one of the things I got to see just driving through, a lot of West Central Missouri, East Central Missouri, and then, everywhere from, I guess, Central Missouri down to East Texas, that little corridor there. There's a lot of really green, a lot of strong production. But to really cap off this soybean crop, this month of August is going to be really important when it comes to that precipitation and rainfall. The corn in a lot of areas looks to be, I don't want to call it made before it's out of the ground, but it looks very strong. But you're just kind of waiting on those continued August rains for that soybean crop to get over the top.
Yeah, absolutely. I think need some more moisture. There are parts of the Corn Belt that have enough soil moisture, adequate soil moisture to kind of carry them through. Some of your lighter soils that drain extremely well, don't have as much organic matter. We need to keep feeding those plants moisture. Missouri, I think, fits into that category very well. It was very dry the last few weeks, although cooler, but still very dry. And so, some of the soybean fields I was looking at as I was driving around Missouri were starting to show some lightness in the leaf colors on soybeans on hillsides, starting to see some grayish tints just kind of start to appear. And the pods are there. They just needed moisture to continue to fill, and I think that they're getting some support this week.
All right. Well, Ben, looking elsewhere within the market, maybe a little bit, I don't want to call them our niche crops, but we're seeing, some kind of sideways movement on the wheat front, and then some just slight gains within cotton. What's your breakdown of the kind of the wheat and cotton pictures as we move through the month of August?
Yeah, I'm gonna stick with cotton here if you don't mind.
Uh-huh.
So the cotton numbers that we got this week from USDA were supportive of higher cotton prices, even though they lowered the season average cotton price 2 cents per pound to 66 cents per pound. That's hard to say. I could actually kind of make a case for maybe a little bit higher cotton numbers moving forward. We saw that harvested acreage yield come down lower than what we anticipated. The yield was reduced just slightly to 840 pounds per acre. All told, that continues to tighten the supply side of the cotton balance sheet. We did see export number that was reduced 1 million bales. That's disappointing considering how big the export market is for cotton. We would like to see continued shipments, even if we reduce some production. So hopefully we see a little bit stronger an export picture. Again, cotton is very connected to the global macroeconomic market. And so, now that we've seen some of those maybe fears of a global recession start to back off, they're still there, but start to back off a little bit. Maybe that helps the cotton demand picture a little bit and allows for prices to move higher. But reduced supply on cotton that lowered production almost 2 million bales, and so that was helpful, and I think will really help move that market, or at least position that market to be able to move higher if demand picks up some or even more than what we think. On the wheat side of the picture, you asked about wheat, and I'll just touch on wheat for just a second. It is very rare on USDA report days where we see the spring wheat markets and the winter wheat markets move opposite of each other, but that's exactly what we got this week. So winter wheat production was estimated even higher, which is surprising considering how late in the marketing year, or how late after harvest it came. Whereas we saw increases in production for those spring wheat, we saw decreases in production for those spring wheat acres. Some acreage declines, but really it came on the yield side as well, and led the spring wheat market to move higher while the winter wheat market fell lower.
There you go. Well, Ben, I always love talking prices because there's always that major if in there, one way or the other. Looking forward, what should farmers and ranchers really be paying attention to this week that could move the markets?
Yeah, so it's a busy week from a number of different fronts. We're talking Tuesday morning here, as we always do, and already this morning the producer price index has come out. That's the Federal Reserve's preferred measure of inflation. Nothing too surprising there. I think it keeps the Federal Reserve on pace to maybe cut interest rates 1/4 to even 0.5% in September. The CPI, the Consumer Price Index, will come out Wednesday of this week. We also have housing starts and permits, which is another measure of kind of the broader macroeconomic picture coming out on Friday morning. On the commodity side, we have the National Soybean Processors NOPA report coming out on Thursday, August 15th, not April, August 15th at noon of this week, or 11 a.m. Central Time. And then Monday, just kind of an announcement, and I'm sure we'll talk about this next week, so teeing up a little bit, but the Pro Farmer Crop Tour begins across the Midwest. And so traders and market analysts will be getting out around the countryside to look at fields. I'm not going on the tour. I've never been on the tour. Maybe one of these days, I don't know, but it's certainly the market pays attention to that, because for a lot of these traders, this is their first and maybe only time out in the fields during the growing season. So the market follows that crop tour pretty closely.
You gotta put on a lot of sunscreen for a lot of these traders. Might be the first time in the sun all summer.
Yeah.
But no, Ben, it's always a pleasure to have your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.